Hey there, small investors. Ever wondered how to get your foot in the door with small apartment investments? Well, today I'm going to unlock the secrets to creating the perfect investment vehicle that will help you raise capital and attract investors. Let's dive right in. First up, structuring your investment entity. An LLC or limited liability company is a popular choice. Why? Because it offers liability protection, flexibility in profit distribution, and tax efficiency. This is perfect for syndications or joint ventures, allowing you to share profits and tax benefits with your investors. Now, let's talk partnerships. Whether it's a general or limited partnership, this structure lets you pool resources while defining management roles and liability. In a limited partnership, general partners manage the investment, while limited partners contribute capital and limit their liability to their investment. It's a win-win. For those thinking bigger, consider a real estate investment trust, or REIT. Though less common for small apartment investors, a REIT allows pooled investment in real estate with favorable tax treatment and often more liquidity. Just keep in mind, REITs require more regulatory compliance and might suit larger portfolios better. Tailoring your investment structure is all about meeting investor preferences. Return expectations vary, so it's crucial to address preferred returns or profit sharing. Preferred returns, for instance, guarantee investors a minimum return before splitting profits. Great for those conservative investors looking for stability. Risk appetite is another key factor. Some investors crave the high-risk, high-reward nature of equity ownership, while others seek the steady returns of debt positions. Offering different equity or debt options can make your opportunity more appealing to a broader audience. And don't forget liquidity preferences. Some investors need flexibility, so having clear terms on holding periods, exit options, and potential buyouts can make all the difference. It helps investors make informed decisions based on their liquidity needs. Next, let's talk about incentivizing investors with attractive terms. Preferred returns guarantee investors a minimum annual return, say 6 to 8%, before profit sharing kicks in. This reduces perceived risk and ensures stable returns. Profit-sharing arrangements can sweeten the deal. For example, a 70-30 split, 70% to investors and 30% to sponsors, aligns rewards with project success. Everyone wins when the property performs well. Equity participation is another great incentive. It allows investors to share in property appreciation, benefiting from both cash flow and property value growth. Equity holders often gain from refinancing or sale proceeds, making this option appealing for growth-oriented investors. Here's an example. Structuring a syndication or joint venture partnership using an LLC. Let's say you offer an 8% preferred return and a 70-30 profit split after the preferred return. This structure aligns the sponsor's interests with investors, rewarding both parties proportionally to the property's performance. So, there you have it. By structuring your investment vehicle thoughtfully, you can attract the right investors and set your small apartment investments up for success. Thanks for watching and happy investing.